Hi, it's Rach here. I'm joined by Rob.
G'day, how you going, Rach?
Good, thank you. How are you?
Good, thank you.
That's good.
Welcome to the Investor Motivation Podcast.
Thank you.
What are we chatting about today?
So this week we're doing a deep dive into ASML Limited.
Cool.
So we're going to cover off 8 key areas. So I'll quickly go through those. So what does the business do? Where does their income come from? Their economic moat, so their competitive advantage essentially. Past performance, financial health and balance sheet, dividend payout ratios, analyst valuations, and who owns the business. And lastly, what's happening in any news and announcements.
Right, that's a fair bit.
That is. But
lot to talk about, and about a company that is integral for semiconductor and chip manufacturing. It's extremely complex, and we're definitely not qualified to make any comment about how on earth they do this stuff.
No,
because it's lasers and it's nanometers. It's tiny. It's incredible what they can get these transistors onto a semiconductor. It's hard to explain. Yeah,
you're doing a good job though. I can't even pronounce words, so it's great.
I think it's so ASML. These guys are based in the Netherlands.
That's right.
So these guys are just critical when it comes to computing power, computing storage, and obviously what's happening with artificial intelligence, where it just takes more computing power. And this is what makes this business and their customers so important, so integral to the world in terms of computing power. So their customers are, what are some of the names, Rach?
So there's Intel's a big one, the Taiwan Semiconductors, which then stems across to, say, NVIDIA, Apple. We use these chips in everything basically these days. That's technology minded.
And
so
some of the machines that they make, there is the extreme ultraviolet lithography machine that this is their new one, and they have been taking orders. I think some of these orders, I think Samsung may have postponed an order for one of these machines, but these are costing $380 million US dollars. It is extreme.
It's huge.
So, but it's critical for computing power, for storage, for speed, and that's what AI is demanding.
Absolutely, and it's only going to increase over time. So,
and these guys obviously are the leaders and at this this top end area where you can get the chips smaller, more transistors, more layers on these semiconductors. These guys have around 90% of the market. So, so this makes them really just critical to the world. The world in terms of computing power and the way things are going. So based on that probably launches in quite nicely to their economic moat.
So they've definitely got a wide economic moat, which is because the machines that they're making are so hard to replicate, and the technology that they're using is so complex that it would be hard for anyone just to break in, of course. So there's a bit of a misconception that they make the chips, but they just make the machines to do the chips.
To make the chips.
Yeah.
And if anyone's got any interest to look any further to find out exactly what they do, I'd highly recommend that you search ASML lithography machines, and there is this, we are talking lasers, and there are mirrors that that deflect these lasers down to obviously nanometers, whatever the hell it is, in terms of the size and precision. It's just off the charts, and they use magnets to move the chips around so they can print onto these silicon wafers. I said, don't take our word for it because it's not worth it, but go and have a look, YouTube it, go and see what they do. You can see why this is so hard to replicate, it's so hard to replicate I can't even explain it properly.
Yeah, that's true.
Very good. So that's the economic moat. The economic moat is wide. Of course, there's always competitors, but these guys obviously been doing this for many years. So what does it mean from, I suppose, a share price performance, also revenue and profit growth performance, Rach? What does that look like?
So this week there's been a significant decline in the share price. But over the last 12 months, it's seen some volatility, which is in line with normal market conditions as well in the tech sector. But yeah, despite this, they've maintained strong revenue and growth. One of the reasons that the share price copped a bit of a hiding this week was their announcement for their forecasts weren't as good as what the market was expecting.
Right, so, and quite often the markets are reasonably impatient. They're wanting results now, constantly all the time.
Yeah.
And when it's not quite what they want, and the market went down probably over the last week about 20%. And that's the reason why Rachel and I decided to have a chat about ASML, was that, we see it as one of those disappointments in the short term, but more than likely the business is still reinvesting heavily for growth. And so we sort of thought it was timely to have a conversation about a business that just got whacked by 20%. So billions of dollars was wiped off off their market cap. But in terms of earnings growth, it's been growing for the last 5 years, is around 21% per year on average. And earnings per share is around 22%. So it's been growing very well. For the last 12 months, despite the 20% drop we've just seen, it is up 20% for 5 year, and this is growth only returns. It's up 184, and the all-time figure, which I quite like doing, I do the search on my iPhone when I do this. So the all-time growth, so if you invested right at the start, is up about 28,000%. Now,
incredible.
It's a bit rich for me to say, hey, to give you those numbers. To be the start of these businesses, obviously you can't go back in time. It's extremely hard to find these businesses right at the start, but you don't need 28,000%. You just need something that goes up 400% or 200% or 1,000%, which is a 10-bagger.
Yeah,
so,
and it's interesting to see what businesses can actually do. So,
if you hold them for a very long time.
Yeah.
Very good. So the future performance, what are the analysts saying in terms of revenue growth?
They're expecting that it'll continue growing as demand, for the chips increase again.
Yep.
It'll be driven by AI, 5G, and also the automotive industry, because of course that's heavy tech as well in our cars. So.
Yep, and all of a sudden we've got Tesla out there with fully autonomous cars driving around and robots, which has been extraordinary. We'll have to have a chat about Tesla. There is a extraordinary business and what they're doing, but obviously all this just leads back to more chips, more computing power.
So their revenue's forecasted to increase. So while there's short-term concerns potentially, long-term looks great.
Fantastic. Balance sheet. We believe that the balance sheet is vital. If you have lots of debt, and this, at a business level, debt is bad. At a household level, debt is bad, and it can bring things undone. What's the key metrics look like there from a balance sheet point of view, Rach?
Strong balance sheet. They've got substantial cash, which we love to see, of course, and low debt. So this is making sure having good cash reserves and all these figures, make sure that they can put more into research and development as well. So
the debt to equity ratio is just over 30%. So anything below 40% is fine. We often do see companies that have higher debt to equity ratios than that, and CSL was a business that does do that, has in the past, but they've managed debt exceedingly well. So dividends, is this going to pay us a really healthy dividend rate, or is it going to disappoint us on a dividend point of view?
Well, it depends what you think about dividends, I guess, and whether you're chasing growth or not. But the payout ratio, I'll start with, they pay it around 50% to shareholders. In 2023 they declared that it'd be around £6 per share.
Euros, actually.
Sorry. That's representing a 5.2 increase from the previous year.
But the dividend payout itself is around 1%. So this business reinvests very heavily for future growth. And when I poorly attempted to explain what their machines do and how they do it, it's that complex. You could probably imagine these things obviously takes a lot of reinvestment, a lot of manpower, and I think it takes, when they ship one of these machines out, it takes them 250 engineers and 6 months to rebuild and put it together. So that's just the build. Then there's the ongoing servicing of their existing machines as well.
Yeah.
So it is quite extraordinary. As I said, please Google, go and watch a couple of videos on it. You will be amazed. Thank you for that. Now, the analyst valuations, what we've been doing there is we go and have a look at there are many analysts that are reviewing these businesses. So we go and have a look and see what they think, whether it's a buy, a hold, or a sell. And we go to, and you guys can do this as well, we go to Yahoo Finance. You type in the company you want, and you go down, and it gives you a bit of an idea and gives you nice colours, green, light green, and then there is red for a sell. So what does it look like for the September numbers for ASML, Rach?
Yeah, so out of the 14, they've got 5 as a strong buy, and then 8 as a buy. But then October, it's sort of they've downgraded that a little bit with the news as well.
Yeah, but obviously we're not through all of October, so we don't really know exactly what everyone thinks there. But there is always changing opinions. So the analyst price targets. So it's currently trading at around a bit over $700 per share. That'd be US dollars. The average price target across all those analysts is about $1,000. There is a high end of $1,300 and a low end of just under $700. So from that point of view, it looks pretty positive.
Yeah, absolutely.
And when I say positive, you've got to take a long-term view. We have just seen the share price come down 20%. That's what happens in the markets. The markets get disappointed. They don't get quite what they're after, and investors will sell it down, very quickly. Is that where the buying opportunity lies? And I suppose, since we're talking about buy or hold or sell, what's your thoughts, Rach?
At the moment, while we've just had this news and the market's done a little bit of a dummy spit, I'd be looking to buy.
Yep, and I'm the same.
But progressively, of course, for clients as well. So we
markets.
don't know what's ahead.
Yeah, when we look at what's happened in recent times, the Nasdaq's up 40%. The All Ords is up 22% for the last 12 months. They're extraordinary results. But obviously there's opportunities that come up every now and then.
Yeah.
But please understand this is general advice only. Any latest news that we haven't covered off for ASML?
I think the main one we have, covered off, which was the results, the forecasts.
The dummy spit.
The dummy spit.
Yep.
So, which we see from time to time. But aside from that, there's been no real things come up, I don't think.
Cool. Excellent. Very good. A business that's working hard, highly intelligent people, lots of people working hard to make their products better, and they're coming out with, obviously, this new machine, which is a pretty cool $380 million worth. For us, it's definitely a long-term hold and a buy, given the recent decline in share price.
Yeah.
So that's ASML. But please do your research. This is general advice only. And thank you very much for listening. Thanks, Rach.
Thanks, Rob.
Cheers.
See ya.
Bye.